What's your take as to the scale of sell-off we've seen in the market in relation to this health scare?
I think the sell-off's understandable because, a virus like this is going to raise economic uncertainties in people's minds. So I think risk premia should be rising. Stocks have had a great run, so I'm not surprised it's taking place. And when you look at markets like high yield, which lead equities, high yield spreads have really blown out. The VIX futures market has inverted, and that's usually telling us a deeper sell-off is underway. So, I think markets are going to be kind of sloppy in the short term, but I don't think it's a doomsayer like, a catastrophic recession's around the corner. I think it's just a short-term risk off.
Yeah, but nobody's willing to say, now's the time. It's interesting, Mike, to gauge the kind of consensus on the closing bell desk from our guests.
Right.
We came in Monday, and there was selling on the coronavirus, and everybody was saying, strategists and investors we talked to, buying opportunity. Today, they're saying it's still a little too uncertain.
Well, the market has essentially told you that it was not positioned and priced to shrug it off. And even though everyone knows that a virus is probably not going to be the thing to bring down this economic expansion or the bull market, the market told you this week that there was a little more froth to skim away, and we had to keep repricing based on what bonds were doing. As Tom says, high yield market has been a tremendous support to stocks for a while. It has softened up. And I mentioned earlier this week about the whole VIX futures being upside down. That also says, rough sledding ahead kind of thing. So I think all those indicators are more or less saying, why be a hero right here? It doesn't mean there has to be that much more depth to the pullback, but it does mean that the market seems to have entered a different type of phase, has a new character from what it was a month ago.
Mike, have there been more high-profile earnings misses than earnings beats as well?
I would say not necessarily high-profile. No, I think it's a percentage. It's roughly in line with history in terms of how many companies are beating and not. I think some of the surprises have been the biggest, best-performing Nasdaq stocks have done enough on their earnings to actually, keep their stock prices supported, like Apple and Amazon, until today. On the other hand, I think that the global industrials have not given you much assurance that there's a turn here, right? Whether it's Caterpillar or 3M.
So, Tom, we had a Fed meeting this week. Fed Chair Powell did say he was watching coronavirus as one of the potential sources of uncertainty. Right now, we're pricing in a full 50 basis points of cuts in 2020. So the market is fully expecting at least one, maybe two cuts here for the interest rate. How's that going to impact the market?
Well, I think that's really what's important for most people's time horizons. The weakness that we might see in the next few months isn't going to make the full year a negative year for stocks. I think 2020 still ends up a double-digit return because we got the Fed put. Plus, I think there's a TINA put out there. There's no other alternative. I mean, equities have really high risk premia, really good dividend yield against the 10-year. And so I think stocks ultimately become like a shopping list again. But, as Michael's pointed out, high yield and the VIX, I mean, these things, which on Monday really were telling us to be wary, have only gotten worse. So I think in the short term, it's, like as Michael said, what this relentless bid of stocks is taking a pause, and that's why we might correct.